Hello everyone, I'm CA Neeraj B. Welcome back to my YouTube channel at the rate Accounting Buddy NB, where we simplify complex accounting topics for you. In today's lesson, we will be covering key accounting concepts that matters to every student and professional. We will learn everything about rebate and its treatment in seller and buyer's books. We will also cover accounting treatment of bad debts and bad debt recovery, followed by a question and answer session to clear your doubts. Whether you are a beginner or looking to refine your accounting skills, this lesson is packed with valuable insights and lots of practical examples. So grab your seat and let's dive right in. Let us learn the term rebate. A rebate is a partial refund or discount offered by a seller to a buyer after the purchases have been made, typically as an incentive or a reward. Rebates are often used in sales promotion to encourage purchases or build customer loyalty. A rebate is a discount allowed by the seller of the goods but for the reasons other than for which the trade discount and the cash discounts are allowed. A rebate may be allowed for poor quality of goods, goods sold not being as per specifications, and other similar reasons. Let us now understand the accounting treatment of rebate with the help of an example. Polly sells goods to Molly of $100,000. The goods sold were of poor quality, therefore Polly allowed a rebate of $15,000 to Molly. The journal entry in the books of accounts of Polly, the seller, will appear as shown on your screen. The two accounts which are affected are Molly's debtor account and sales account. Molly's debtor account is a personal account and will be debited under the rule debit the receiver. Sales account is a nominal account and as per rule of nominal account, credit all incomes and gains. Therefore, this transaction is recorded for $100,000 by debiting Molly's debtor account and crediting sales account. Please note that the entry will first be recorded at full value of $100,000. Rebate is allowed after the sales transaction is completed. The three accounts which are getting affected are cash account, rebate allowed account, and Molly's debtor account. Cash is a real account and as per real account rule, cash account is debited for $85,000. Rebate allowed being a nominal account is also debited under the rule debit all expenses and losses for $15,000. Molly's debtor account is a personal account and will be credited with $100,000 under the personal account rule of credit the giver. Rebate allowed will be deducted from the sales value in the trading and profit and loss account. Let us now understand the accounting treatment of rebate with the help of the example in the books of accounts of Molly the purchaser. The journal entry in the books of account of Molly the purchaser will appear as shown on your screen. The two accounts which are affected by this transaction are purchase account and Polly's creditor account. Purchase is a nominal account and will be debited under the rule of debit all expenses and losses. Polly's creditor account is a personal account and it will be credited under the rule credit the giver. Therefore, this transaction is recorded for $100,000. Now, when Molly makes the payment to Polly after getting a rebate of $15,000, below entry is passed. The three accounts which are getting affected are Polly's creditor account, rebate received account, and cash account. Polly's creditor account is a personal account. It will be debited under the rule debit the receiver for $100,000. Rebate is a nominal account and it will be credited under the rule credit all incomes and gains for $15,000. Cash is a real account and it will be credited under the rule credit what goes out for $85,000. Rebate received by the purchaser will be deducted from the purchases in the trading profit and loss account. Let us now learn the difference between the trade discount rebate and the cash discount. The first basis of difference is purpose. The trade discount is offered to encourage bulk purchases. Rebate is given as a special concession or promotional offer to encourage purchases or to clear old stock or due to poor quality. Cash discount is provided to encourage prompt payment by the buyer. Second point of difference is the nature of the transaction. Trade discount is allowed on both cash and credit sales and purchases. Rebate is allowed on both cash and credit sales and purchases, while cash discount is allowed only on payment. The third point of difference is recording. Trade discount is not recorded separately in the books of accounts. Rebate is recorded separately in the books of accounts because it is allowed after the sale is made. Cash discount is recorded separately in the books of accounts. Next difference is based on deduction from invoice. Trade discount is deducted from the invoice. Rebate is not deducted from the invoice, but it is deducted from the sales and purchase in the trading account. Cash discount is not deducted from the invoice. Next basis of difference is consideration. In case of trade discount, the consideration for allowances purchases. For rebate, the consideration for allowances other than for which the trade discount and the cash discount are allowed. For cash discount, the consideration is payment. Another basis of difference is relation. Trade discount is related to sales and purchase of goods. Rebate is also related to sales and purchase of goods, while cash discount is related to payments. Let us understand the journal entries in the case of trade discount and cash discount with the help of the illustration displayed on your screens. Tolly Watches LLC purchased 20 pieces of Good Times brand watches from Grand Watches LLC at a list price of $3,000 per piece, less 10% trade discount. A cash discount of 2% is also allowed if the payment is made within 7 days from the date of the transaction. Tolly Watch LLC settled the payment within 7 days. Pass the journal entries in the books of both the parties. Let us first learn the recording of journal entry when watches are sold and purchased. The total list price of 20 watches at the rate of $3,000 per watch is $60,000. After deducting 10% trade discount of $6,000, the value of sale or purchase comes to $54,000. The journal entry in the books of Grand Watches LLC, the seller, will appear as shown on your screen. The two accounts which are affected are Tolly Watches debtor account and sales account. Tolly Watches LLC debtors account is a personal account and it will be debited as personal account rule of debit the receiver. Sales is a nominal account and it will be credited as per nominal account rule of credit all incomes and gains. Therefore, this transaction will be recorded for $54,000, which is net of trade discount. No separate entry for trade discount allowed will be passed in the books of the seller. Similarly, for Tolly Watches LLC, the purchase value of the watches is $54,000. The journal entry in the books of Tolly Watches LLC, the purchaser will appear as displayed on your screen. The two accounts which are affected are purchase account and Grand Watch LLC creditor account. Purchase account is a nominal account and it will be debited as per nominal account rule of debit all expenses and losses. Grand Watches LLC creditor account is a personal account and it will be credited as per the personal account rule of credit the giver. Therefore, this transaction will be recorded for $54,000, which is net of trade discount of $6,000. No separate entry for trade discount received will be passed in the books of purchaser. Now let us understand the journal entries when payment is settled for the transaction discussed in previous slide. The sales or purchase value after trade discount is $54,000, and this is the value for which the sales and the purchase transactions are booked in the respective books of the seller and the buyer. Now seller has allowed a cash discount of 2%, which amounts to $1,080, and therefore the net payment of $52,920 will be paid by the purchaser to the seller to settle this transaction. The payment entry in the Grand Watches LLC, the seller's book, will appear as displayed on your screen. The three accounts which are affected are cash account, discount allowed account, and Tully Watches LLC debtors account. Cash is a real account and it will be debited as per the real account rule of debit what comes in for $52,920. Discount allowed is a nominal account and it will be debited as per the nominal account rule of debit all expenses and losses for $1,080. Tully Watches LLC debtors account is a personal account and it will be credited as per personal account rule of credit the giver for $54,000. Similarly, the journal entry for this transaction settlement in the books of accounts of Tully Watches LLC, the purchaser will appear as displayed on your screens. The three accounts which are affected are Grand Watches LLC creditor account, discount received account, and cash account. Grand Watches LLC creditors account is a personal account and it will be debited as per personal account rule of debit the receiver for $54,000. Discount received account is a nominal account and it will be credited as per the nominal account rule of credit all incomes and gains for $1,080. Cash is a real account and it will be credited as per real account rule of credit what goes out for $52,920. Let us understand journal entries for specific transactions. First is bad debts. When the business sells goods on credit, business will have receivables from the customers. An amount out of the total amount receivable from the customers which is not recoverable is a bad debt. It is a loss for the business and is debited to the bad debts account and credited to the personal account of the debtor. Below entry is passed when the total amount is not recoverable. Bad debt account is debited being the business expense and debtor's personal account is credited as the amount outstanding in his account is no more recoverable. When part of the debt is recoverable, below entry is passed. Cash or bank account is debited with the amount received. Bad debt account is also debited with the amount not recovered, and the debtor's personal account is credited with the total amount due from the debtor. Let us now learn all about the term bad debts recovered. A debtor whose outstanding amount was earlier written off as bad debts may pay the amount in part or in full. Such a recovery is called bad debts recovered. When goods or services are sold on credit, business will have debtors. When amount is not recovered from debtor, business will have bad debts. When bad debts are written off as business expense, business will have loss. When debtors pay part or full amount of the bad debts, the money so recovered will be considered as bad debts recovered. Therefore, when business records bad debts recovered amount, business will consider it as gain. Amount received against the bad debts earlier written off is credited in a separate account called bad debts recovered account. The amount so received will not be credited to the personal account of the debtor from whom the money is now received. The journal entry for bad debt recovery is passed as appearing on your screen. Cash or bank account is debited and money so received is credited to a nominal account bad debt recovery account. Bad debt recovered account is shown in the credit side of the profit and loss account. Let us now study an illustration for bad debts and bad debt recovery journal entries. Transaction T66 is an amount of $500 due from Poly Traders LLC is irrecoverable. The two accounts which are affected by this transaction are bad debts account and Poly Trader LLC account. Bad debt account is a nominal account and it will be debited as per nominal account rule of debit all expenses and losses. Poly Traders LLC is a personal account and it will be credited as per personal account rule of credit the giver. Therefore, this transaction is recorded for $500 by debiting bad debt account and crediting Poly Traders account LLC. Transaction T67 is Gully Paints LLC declared insolvent, received from his official receiver 70 cents per dollar on a debt of $20,000. Insolvent means the person or the business is unable to pay the debts when they do not have enough money. The three accounts which are getting affected are cash account, bad debt account, and Golly Paints LLC account. Cash is a real account and it will be debited by $14,000 as per real account rule of debit what comes in. Bad debt is a nominal account and it will be debited by $6,000 as per nominal account rule of debit all expenses and losses. Gully Paints LLC is a personal account and it will be credited as per personal account rule of credit the giver for $20,000. Transaction T68 is an amount of $150 is received in cash for bad debts written off in last accounting year. The two accounts which are affected are cash account and bad debt recovery account. Cash is a real account and it will be debited as per real account rule of debit what comes in. Bad debt recovery is a nominal account and it will be credited as per nominal account rule of credit all incomes and gains. Therefore, this transaction is recorded for $150 by debiting cash account and crediting bad debt recovery account. Let us now learn various aspects of journal entries related to banking transactions. Businesses normally make and receive payments through bank accounts. Some of the common business transactions are payment by check, check received, withdrawal of cash from bank, cash deposit in bank, bank charges, bank interest received or charged. If books of accounts of a business show a debit balance in the bank account, it means that such money of the business is lying with the bank. If the books of accounts of a business shows a credit balance in the bank account, it means that such money is overdrawn by the business and is payable to the bank. Under traditional classification of accounts, bank account is a personal account. Therefore, the rules of debit and credit for personal account will be applied while recording the bank transactions, and the rule is debit the receiver and credit the giver. Under modern classification of accounts, bank is an asset and will follow the rule of debit when increases and credit when decreases. Let us now learn some common bank journal entries. The transaction T69 on your screen is cash deposited for opening a bank account. The two accounts which are affected are cash account and bank account. Bank is a personal account and the rule of personal account is debit the receiver. Cash is a real account and the rule of real account is credit what goes out. Transaction T70 is cash withdrawn from bank for business use. The two accounts which are affected are cash and bank account. Cash is a real account and the rule of real account is debit what comes in. Bank is a personal account and the rule of personal account is credit the giver. Transaction T71 is cash withdrawn from bank for personal use. The two accounts which are affected are drawings account and bank account. Drawings account is a personal account and the rule of personal account is debit the receiver. Bank account is also a personal account and the rule of personal account is credit the giver. In case of drawings, the receiver is the owner of the business. Drawings are deducted from the capital of the business owner. The transaction T72 is payment by check to a creditor, Poly Traders LLC. The two accounts which are affected are Poly Traders account and bank account. Poly's Traders account is a personal account and the rule of personal account is debit the receiver. Bank account is a real account and the rule of real account is credit the giver. Transaction T73 is payment by bank draft to a creditor, Kohli Trader LLC. The accounts affected by this transaction are Kohli Traders LLC account, bank charges account, and bank account. Kohli Traders LLC is a personal account and the rule of personal account is debit the receiver. When business makes payment by a check draft, the issuing bank charges service fee for issuing the bank draft. These charges are business expenses, hence debited to the bank charges account. Bank charges account is a nominal account and the rule of nominal account is debit all expenses and losses. Bank account is a personal account and as per personal account rule, credit the giver. Transaction T74 is payment of office rent made by check. The accounts affected by this transaction are rent account and bank account. Rent account is a nominal account and as per nominal account rule, debit all expenses and losses. Bank account is a personal account and as per personal account rule, credit the giver. Transaction T75 is bank charged service charges for the issuance of a checkbook. The two accounts affected by are bank charges and bank account. Bank charges account is a nominal account and as per nominal account rule, debit all expenses and losses. Bank account is a personal account and as per personal account rule, credit the giver. Transaction T76 is check returned charges are charged by the bank. The two accounts affected are bank charges account and bank account. Bank charges is a nominal account and as per nominal account rule, debit all expenses and losses. Bank charges is a personal account and as per personal account rule, credit the giver. Transaction T77 is loan taken from the bank and is to be repaid in 5 years. The two accounts which are affected are bank account and the bank loan account. Bank account is a personal account and as per personal account rule, debit the receiver. Bank loan account is also a personal account and as per the personal account rule, credit the giver. Transaction T78 is interest charged by bank on the loan given by the bank. The two accounts affected are the interest account and the bank account. Interest account is a nominal account and as per nominal account rule, debit all expenses and losses. Bank account is a personal account and as per personal account rule, credit the giver. Transaction T79 is check received from customer Rolly Trader LLC and it is deposited in the bank on the same day. The two accounts affected are bank account and Rolly Traders LLC account. Bank account is a personal account and as per personal account rule, debit the receiver. Rolly's Trader LLC account is also a personal account and as per personal account rule, credit the giver. The transaction T80 is check received from customer Poly LLC and the check is not deposited in the bank on the same day. The two accounts affected are check in hand account and Rolly LLC account. Checks in hand account is a real account and as per real account rule, debit what comes in. Rolly LLC account is a personal account and as per personal account rule, credit the giver. Transaction T81 is when the check referred to in transaction T80 is actually deposited in the bank on the next day. The two accounts affected are bank account and check in hand account. Bank account is a personal account and as per personal account rule, debit the receiver. Check in hand is a real account, and as per the rule of real account, credit what goes out. Transaction T82 is check received from the customer Roli Traders LLC deposited in the bank but is dishonored. The two accounts which are getting affected are Roli Traders LLC account and bank account. Roli Traders LLC account is a personal account, and as per personal account rule, debit the receiver. Bank account is also a personal account, and as per personal account rule, credit the giver. Please note that when a check is dishonored, the original entry which was passed debit bank account and credit Roli Traders LLC account is reversed. Please note that when the check received from a debtor is dishonored, it is debited to the personal account of the debtor. The transaction T83 is interest paid by bank. The two accounts affected are bank account and the interest received account. Bank account is a personal account, and as per personal account rule, debit the receiver. Bank interest received is a nominal account, and as per nominal account rule, credit all incomes and gains. Transaction T84 is repayment of bank loan. The two accounts which are affected are bank loan account and the bank account. Bank loan account is a personal account, and as per personal account rule, debit the receiver. Bank account is also a personal account, and as per personal account rule, credit the giver. Transaction T85 is balance transferred from Citibank to Kitty Bank. In this transaction, the accounts affected are the two bank accounts, Kitty Bank account and Citibank account. Both bank accounts, Kitty Bank account and Citibank account, are personal accounts. As per rules of personal account, debit the receiver, that is the Kitty Bank, and credit the giver, that is the Citibank. Question number 31 is, how do you record an accrued expense? The answer is debit expense account and credit liability account. Question number 32, what is an accrued revenue? The answer is revenue earned but not yet received. Question number 33, how do you record an accrued revenue? The answer is debit accrued income and credit revenue account. Question number 34, what is a prepaid expense? The answer is prepaid expense is an expense paid in advance. Question number 35, how do you record a prepaid expense? The answer is debit prepaid expense account and credit cash account. Question number 62 is bad debts earlier written off and now recovered are credited to. The available options are option A bad debts account, option B bad debts recovered account, option C debtors account, and option D miscellaneous income account. And the correct answer is option B bad debts recovered account. Question number 63 is a simple journal entry is, and the available options are option A any entry with multiple debits and credits, option B any entry with no debits, option C any entry with one debit and credit, and option D an entry with only debits. And the correct answer is option C any entry with one debit and credit. Question number 64 is what type of account is unearned revenue? And the options available are option A asset, option B liability, option C equity, and option D revenue. And the correct answer is option B liability account. In this section, we will try and attempt few true or false questions and answers. Question number 83 is a journal entry must always have equal debits and credits. And the answer is true. Question number 84, a journal is a chronological record of all transactions. This is again a true statement. Question number 85, a compound journal entry can have multiple debits and credits. This is again a true statement. Question number 86, a simple journal entry involves only one debit and one credit. This is again a true statement. Question number 87, adjusting entries are made at the beginning of an accounting period. This is a false statement. Question number 88. A trial balance ensures that all the journal entries are correct. This is a false statement. Question number 89. Unearned revenue is recorded as a liability. This is a true statement. Question number 90. Sale of goods to Polly for cash should be debited to Polly's account. This is a false statement. Question number 91. The book in which a transaction is first recorded is known as journal. This is a true statement. In my upcoming video of part 5 in the series of journal entries on 22nd March 2025, we will cover 13 topics displayed on your screens and a session on question and answers. If you enjoy the content of my video and appreciate my teaching style, please subscribe, share and like my YouTube channel at the rate Accounting Buddy NB. Thank you and goodbye for now.